Good morning, traders. We have made it to Friday. I hope you survived the week, all of you, until now. And we are the 25th of October, are we? Yeah, 25th of October still. And there's a loads to go through, but if I would go through everything, it would be a 2-hour session. So I'm going to try to keep it a little shorter. In the meantime, as you all know, we still have our October discount going on, and I'm not sure whether it's put on here, but I think there's 20% discount still running until the end of October on the TFP trader funding program, where you can trade our money and not risk yours. Your only risk is your assessment fee. And you can take up to 75 or even 90% of the gains home once you have succeeded your assessments. You also get a one-on-one onboarding meeting with Blake. And if you sign up for the trading funding program, you also get, depending on which account you sign up for, a number of days or even months access to our ForexAnalytix platform and our chat room, where a lot of like-minded traders are helping each other out every day. Our trader funding, coaching program is still running as well. You can see it here. You get some discounts on your first hour, then some additional discounts if you want to take up more sessions. There's a whole bunch of us doing this coaching program, trying to help younger or older traders who may experience some difficulties, to help them navigate through the meanders of the markets. So that is still running as well. Okay, then let's move on to what's happened. And since we have the Japanese elections ahead of us this weekend, I am going to do the Japanese block later towards the end of it. So we are going to run through all the rest first, and then we will see what we have or can expect from this Japanese election over the weekend. Right, we had a slew of ECB speakers over at the IMF meetings or the G20 meetings. Most of them, in various degrees, seem to hint at a continuation of the rate cuts, because some of them are clearly on the dovish side. Others are more conservative and still want to see the data. Well, actually, all of them want to see the data, and I'm pretty sure they want to see the outcome of the US elections as well, to make further decisions. But the one that summed up the whole lot really was ECB Wunsch. And he said that some people are talking about the bigger cuts, but we still have data and events to come. So he's not made up his mind yet, but he sees fairly little reason to do 50s right now. And that seems to filter through all the talkers. Of course, we have a few exceptions, the ultra doves wanting to press for 50 on the next meeting. So it will be a decision to make. There will be talks about both 25 and 50 BPs, I reckon. But so far, nobody is really committing to going for those ultra large cuts. So as Lagarde also said over the presser, not closing any doors, but the base case would be for a continuation of the 25 BPs cuts. Then we're moving over to China. So they kept the 1-year medium-term lending facility rate unchanged after the big cut of September, which was widely expected as in the market. They also actually took a bit of liquidity out of the markets overnight. Usually they have the tendency of adding some liquidity, but they don't seem that particular facility of liquidity to still be that needed. So they took out some of the liquidity they injected. No, it's not huge, but still, I mean, taking out some liquidity. The PBOC also surprised with a pretty low, if that's correct, pretty low dollar CNY fixing, fixing it at 710.90 versus the prior fixing of 712.86, where there was actually very little reason to materially fix it lower. The market also largely ignored it, but it is a bit strange in my opinion why they would fix it so low, unless that was a mistake and I didn't see that correctly. On the other hand, there's still those shenanigans going on now between Europe and China on the EV side. And China now has asked its car makers to pause the plans or their investment plans in Europe for as long as the shenanigans continue to weigh on the relationship between now Europe and China. Okay, so that for the Chinese block. Then there was, and it doesn't show here on the calendar. There was the New Zealand ANZ consumer confidence coming out there, and that actually dipped saw a pretty big drop down to 91.2 from 95.2. It's not your major indicator for what's happening in the New Zealand consumer, but we do it did have the impact, it seems at least temporarily, of holding the Kiwi back from enjoying the rest of the dollar's relative setback that we saw. In the meantime, we're trading back above 60. I will show the Kiwi a little later as well, because I have an interest there. Moving over to the rest of those speakers in at the G20 or elsewhere, and now I'm straight coming to the UK, because we had many speakers yesterday out as well. Most of them are relatively non-committal. What is pretty remarkable is that Bailey didn't manage to kill the pound again. He actually didn't say too much about the monetary policy. One that notably spoke about it is Mann. She is still pretty much on the hawkish side. Still thinks that things are not moving fast enough to the downside for inflation, that there are still other factors in there which are holding them back to start cutting in a bigger way. Okay, that was the notable remark there. Just bear in mind that Bailey is speaking again over the weekend, and there he is potentially going to talk about monetary policy. So keep that in mind if you have sterling in position. Perhaps a little bit of a weekend risk there for the sterling at the opening come Sunday night. So that is one. And then I'm going to straight away continue in the UK for now, because we had Starmer and Chancellor Reeves speaking yesterday. We know that Reeves found, by changing some rules, found the 50 billion sterling somewhere that she can use to invest a part of it and need to fund a part of it. It is said, and she hinted at saying that they will use about 20 billion or so of it for investments by changing those rules. And then Starmer was on the wires as well, and it's widely ignored by the markets, but he probably gave us a bit of a hint at what may be appearing in the budget as well, because he said, amongst other things, he said, like, owners of shares and those who can write checks to get out of problems, and rental property owners, I don't count them as working people. So that means that anybody who is invested or who has more than a threshold that they will put, being labor, it's probably going to be a very low threshold. They are going to get taxed more than likely in the budget coming up next week. I thought that for some the closer the budget would come, the sterling would be a bit on the defensive, but the market is really still actually relatively positive because we are gradually closing in on the 130 again in the cable. So I'm going to have a look at that sterling as well, because next week should be on the move. Last little line on the Aussie front, we had Bullock speaking. She is still pretty hawkish. She said it may take a year or two to get into the target zone between 2 and 3% on inflation. So she is still hinting at staying restrictive, being very patient on the rates in Australia, and that was what she came up with. Then there was, back to Europe, and that's going to be interesting going forward for those who trade Scandinavian currencies, and especially the Norwegian krona. So there was this interview with the governors of the Norges Bank, and they are closing in on a possible change at the way they manage their FX reserves and they manage their balance sheet, hinting at for the time being, we know that Norges Bank, albeit the amounts have been reduced gradually, is still buying foreign exchange in the market every day and selling small amounts like 400 million roughly of Norwegian kroner every day. And changing that approach should mean that they may veer to the other side. Now, it's probably not going to be massive amounts, but it seems that they can change some of those ways that they are handling, and that would change the direction of what they do in FX. So anywhere starting 2025, mark that in your calendars, but anywhere in the start of 2025, we may see changes in the way that the Norges Bank is handling their FX. Just to let you know, every 31st or every last day of the month, sorry, I should say, every last day of the month, the Norges Bank produces the report on what they are going to do with FX for the month to come. So they are very good communicators on whatever they do. So that should be coming as no surprise to anyone who is listening to the Flow Show, to see that all of a sudden, or as planned, they are changing direction for the FX that they are doing. All right. What else? Let's look at a bit of the data that we had. Oh, no, another weekend risk coming is that I've seen an article speaking about US and Israeli spy chiefs having a meeting over the weekend. So for those having risky position, there may be some lines emanating from there. We know that Israel is still planning or holding on any retaliation versus Iran. We don't know about the size of it, which will be important. The targets will be important, but that is still up in the air, and we may get some additional lines. The US is firmly trying to get the hostage deal negotiations back online, but we know that from both sides of the table of those involved, is not really being anywhere close. But keep an eye on that. And then last line on the geopolitical front is that Putin just came out saying that Russia is ready for sensible compromise with Ukraine, but straight away added that they wouldn't make any concessions. So, like the other chats about potential peace plan compromises, it's probably a non-starter once more. Okay, that just came out. Right. Looking at what's happened yesterday, we had after the meeting that we had yesterday, the Flow Show, we had a bit of US data, nothing special on the jobless claims. We had slightly better manufacturing PMI and services PMI. We had slightly better new home sales, but that nothing of all those numbers really impacted the market for more than 5 or 10 pips. Moving over the UK to today, the UK consumer confidence just ticking down a little bit, no big change there. Then, as I said, I'm going to take the Japan block right after. Okay. Then we had some more. What is 10 seconds, Rick? Rick? Do we have anything in? Oh, okay. Sorry. Um, Yes, my 15 minutes. I'm afraid I'm not going to be able to keep it to 15 minutes. There's just too much to go through. We had a bit of Swedish PPI continuing to come down. That one that should keep the stocky a bit offered still. We had the Spanish employment rate still around that 11 and a quarter percent. We had a bit of um, negative readings here on the Italian consumer confidence, but second day in a row with positive German data. And we have to give those a bit of another hallelujah. And we immediately see, if you look at the European the euro behavior that we saw yesterday, and we spoke about that. First of all, there was the bit of the coming to the end of the biggest first leg of Trump 2.0 trading. We felt that it was coming kind of to an end of that first big leg, and the market maybe consolidating a little bit. And then, in addition to that, we had a bit of let's say, green shoot in Germany. And we know Germany being one of the major engines of Europe, that for the euros to stand up lastingly, I've been saying that many times, we are going to need Germany to stand up. The same thing as I've been talking about global revival for oils and commodities and things like that. We are going to need China to Chinese revival, for instance, or less geopolitical pressure, but especially a Chinese revival. Well, for the European zone, it's going to be mainly Germany. If we see green shoots in Germany, that should somewhere be supportive for the euro. And then we had, and that's not on the calendar as well, we had the ECB one-year inflation expectations continuing to come down, was 2.7 prior, came out at 2.4 this time, and the three-year expectations also gradually coming down towards the 2% target of the ECB, coming down to 2.1 versus the prior 2.3. That is countering a little bit, I would say, any positives that we could have on the data front, for as long as those positives are not like hugely positive, okay? But I would say it's as expected. I don't think it calls for a 50 in the ECB either. Those expectations coming down, but it doesn't hurt for the ECB to continue to cut. What they would like to see is a bit of a revival in the economy without too spiky rises in the inflation. But if we get that, that's going to be a bit of a Goldilocks scenario starting in the Eurozone. But let's not put the horse in front of the carriage, shall we? All right, Japan. Okay, first of all, we had the Tokyo CPI coming in. It is coming down, so that should keep the Bank of Japan on their slow, gradual rise of the interest rates. We heard from Ueda a couple of times, still not hinting at any rush. So for next week's Bank of Japan, we should be in a non-moving scenario, but perhaps preparing the market for extra moves unless FX derails the plans. And let's imagine that yen would weaken another 5-6% from here. That actually may trigger them to a hike just to counter those yen moves, because Bank of Japan, let's not forget, are now also starting to talk about the yen moves and the impact that they have on the monetary policy impact in the economy and in the markets. Elsewhere, leading index month on month, still a negative, but the overall here is remaining quite above 100. But it's that those are those numbers that I don't like to see out of Japan. There's still too much distortion in those numbers. You get a couple of good months, and then you've got a weaker one again. That is also pushing me to think that it's still going to be very, very, very gradual in the market. And yes, Jacob, I'll talk about that the euro. And as Rick says, Ryan is off for today. I'm your host. So then moving on to the Japanese elections, and usually they are pretty straightforward. Those Japanese elections for the past let's say 12 years. We had a bit of a stint before of the DPJ, but before as well, it was all an LDP playground. This is the first election in quite a while where the majority could be. I'm not saying. I mean, most analysts are thinking that Ishiba is just going to make it to keep his and the LDPs together with New Komeito, the majority in place, but there is enough uncertainty in the polls to take into account the risk that they actually may lose the majority, and that they will still remain the biggest party, but if they lose a majority, they could end up being a lame duck government, which, if they will need to go in ship with smaller parties, that it may result in a bit of a less hawkish approach, a less conservative right side approach, and some of those people in the smaller parties are pushing still for more economic support. They are still not happy about the place where the economy is. So everything could come out a little bit more dovish if they don't secure a working actually majority. So the aim is to get to the 233 seats, which is just over half of the seats at play. And we will have the results coming in expected late Japan on Sunday into Monday. So for us, and we should be starting to see results on our Sunday afternoon into Monday. And let's move over to the picture of the dollar yen. I'm going to use the dollar yen. I mean, there are other things that we should look at as well, but I'm going to just take the dollar yen as the major pair, because that is the one that is going to potentially drive everything. And if the rest of the market remains relatively quiet, that is going to be the driver of all the of all the process, right? So what are the risks here for the market? The risk is that they don't get that majority, okay? And then I would expect the yen to weaken. And I'm straight away going to say, because we saw and we heard Mimura, we heard Kato, they are holding those regular meetings with Yellen in the Treasury to get the green light if the yen derails to intervene, okay? I mean, they repeated it again overnight. They had a meeting with Yellen, they're going to the G20. That is what Japan does. Don't take it as big news either, okay? I mean, they do that. They do talk very regularly to the Fed. BOJ does it. The MOF talks with the US Treasury. They regularly do so, and they just want to buy the green card for interventions if needed. So what is the risk here? The risk is no majority. And if they don't get a majority, we just look at where we are now. We are trying to close above, and this is a weekly here. We are trying to close above a weekly cloud here for the week. We're just trading around it, okay? So that don't make a decision on the back of this come Monday. Just wait for what the elections are telling us. But if we are above, and we know what the Japanese are doing, they are closely monitoring what's happening on the cloud. We could go higher. Also, the psychological effect of a lame duck, depending on who they have to get into the government to govern with. It may mean that that the yen is going to weaken, and where can it weaken to? Well, we saw that we stopped there in the 153 in the low 153s the other day. I think if they really lose their majority, that's toast, and we are going to have to look at much higher levels. And then straight away think as well about potential intervention. So if they lose their majority, this is going to be your wild trade, in my opinion. All right. If they just get over the line, that is going to be a scenario where the market can have a little bit of a knee jerk and then probably stabilize. But also look at the speed of the moves, because the MOF will keep a very close eye on it. The one that is going to be stable, in my opinion, is if they get over the line, let's say somewhere over 240, and they can continue to govern with less of giveaways to the smaller parties. That's going to be your less disruptive trade, and there I see perhaps even a little bit of a correction down, because just the fact of getting over the line will take away the uncertainty that has been building up on into the elections. So there, I think we can see a bit of a gradual move, perhaps a first move like with a bit of a knee-jerk one to the downside, and then stabilizing. Where, of course, we can see a better move to the downside is, and perhaps down to below 150, is if they just keep their majority. It was all a big scare that that NODA could secure more than, let's say, 150 or 160 seats, and that is perhaps the recipe for trading a bit lower. Can it last? That will be decided on what the Bank of Japan perhaps does. But since the Bank of Japan is widely expected to keep rates on hold, it may also then stabilize, but stabilize at lower levels. So that is about what I'm seeing for the upcoming elections in Japan. So the wild one is if they lose their majority, and then look at the seats that the LDP and New Komeito get together. All right, so that is your risk, on the biggest risk. And I've had questions about people having positions either side of the spectrum right now. I personally will not have positions into this election, because the risk for a disruptive move is too big for me to do it. And anyone who has a shorter term position, you're going to have to put your stop somewhere psychologically too close to the market for comfort. You could be long across yen, and you get one reaction to the downside, and then back up, you're getting stopped. Short, same thing. Imagine that the majority is still there, but too close for comfort, you could still get that knee-jerk reaction, and even with a very tiny majority, still getting stopped out on stuff which is not too far away from the market. It is, I think, the only people who will keep positions in this are those who are in long-term stuff and say, like, okay, we are looking beyond these elections, and our stops are like 7 or 8 big figures away, and we think we are pretty safe in positions that we already have, whether it be short from here or long from here. Then those are probably the ones who can wait. But if you are in a position for a relatively short-term play, I think your risk is both sides, and you could get stopped out both sides, and on any position here. Okay, that for the yen. Euro dollar. We are in what I said. Who is it? Jacob, right? Who is long at 07? Jacob. You're long at 07. Yeah, I think it's not a bad position to have, because what we have now is yeah, what we have now is a bit of is two things. As I already said yesterday, it looks as if the market has done enough right now to start trading the Trump 2.0. Is it finished? No. But can we have a pause? Obviously we can. And the other thing, and that's what I think we can do ahead of the weekend as well. And I will show you some stuff that is moving a bit in line with my thinking on that. Secondly, although we had a bit of weaker data out of Italy, a bit of weaker data out of um, France yesterday. Secondly, we see a couple of green shoots here in Germany. And Germany, as I already said many times, it is one of the major engines in Europe. So we have a bit of a recovery in all things euro right now. Not only euro dollar, you look at euro commods, for instance, are trading a bit higher as well. You look at some other euro crosses are higher as well. Yeah, even euro yen is a bit is still trading around 164.5. Yes, Germany, hallelujah. So yeah, can we go higher? Well, yes, we can. I'm still not a big euro fan, but we can go back and test 108.60, 108.70 before the week is over. Why not? I think Angela is having a position in that direction as well. Just get back to the week's open. It wouldn't be anything overstated. Can we go much higher? I think your Trump 2.0 traders will be waiting to sell euro on rally still. As I say, the shoots are green in Germany, but it's not yet a tree. Okay, I mean we are not yet there on a complete revival. So that for the euro dollar. Cable is interesting. I thought really the market could be a bit more on the defensive going into the budget. But it's still holding well. So technically, as I said yesterday, a bit of a fake sub this trend line, 129 holding, that's fine. So now we are going back to 130. Can we get higher? A bit like the euro. Yes, I think we can get up to 130.5. It's all possible, depending on the numbers this afternoon in Euroland. Now, this being said, in US, sorry. Now, this being said, those numbers in the US, and I didn't show that, right? So I'm perhaps just going to quickly get back to what I had here. We've got two sets of data here in the US. The durable goods, I'm going to say durable goods, they haven't really moved the needle a lot of late. Okay, so it will have to come out very far from expectations to move it. Michigan later on, that can be small of a mover, but if I saw that correctly, it's the final reading, so it may just not be the one that drives markets either. So I think markets are going to rather prepare for the weekend than anything else. Atlanta Fed GDP now they are revising that every 5 minutes. I wouldn't attach too much importance to it. Last time they revised it from 2.5 to 3.4. The market just ignored it. Okay, and then we have the Canadian retail sales. That could be a mover as well this afternoon. So we will have a look at the Canadian dollar. But back to the sterling here. Can it go back up to 130.5? Yes, it can. Why it can as well is that because euro sterling is stopped at this first hurdle. We can't get above 83, 50, 64 now, and that's going to be a requirement as well for the sterling to trade a bit weaker, because this is going to hint if euro sterling goes up, usually sterling as a whole is trading a little bit weaker. So watch that 83.5, 50, 60, call it. Okay, if we start to move above there, then that would spell a bit of danger for the sterling, in my opinion. Canada. Some people have this slide a bit higher. Maybe I should revise it. Oh, is it the one coming? This one maybe that people are looking at. Yeah, perhaps this one. We're slowly creeping up in the dollar CAD with setbacks. Okay, to me, we are around a very interesting level, and I'm going to go back onto the shorter time frame. We are around an interesting level here. We just went a little bit above, but you look 138.45, 138.45, just above, trading above that 78.6 here in the shorter term. I think it's interesting because we're getting delayed reactions in the Canadian dollar to the events. It usually trades like a few hours against what is coming out, and then it takes the direction again of what was happening before, and it looks as if we are doing the same thing again. So I'd say after the retail sales, watch out what's happening around 138.25, 35, stretch it down to these highs here, 138.10. If we're starting to hold those levels, then I think this one can continue to move, and we're going for a test of 139 in the dollar Canada. Have a great weekend, Ali, as well. And we're going up to 139 in dollar CAD, where I think the market should reassess its positions, because it's been a prior high here as well. And it could become, again, this spike was very fast, but it can become, again, a level that the market is going to scrutinize very, very closely. All right. So that is it for the Canadian dollar. Then I'm going to look. I've started to look a bit closer to the Kiwi. Yeah, I know that ANZ report came out a bit weak for the Kiwi consumer, but I've still got the impression that Kiwi, the downside for the Kiwi should at least slow the closer we get into the mid 159. So that is something that I'm keeping a close eye on here. And if we don't get too much dramas on the risk side over the weekends, it may be that we have already seen the bottom, but I really would love to see a move down here in the Kiwi to mid 59s to see then a gradual rebound coming up. Yeah. Okay. I'm seeing you, Angela. All right. So that is for the Kiwi. I'm neutral on the Aussie for now. That is one where I don't really have too many clues. I think there may be a few bottom fishers here around 66, the figure. That may be as well a bit similar picture as in the Kiwi, right? It's been a while. I need to show you that Norwegian kroner that I promised you as well. Okay, this is starting to be of interest for me. Here as well, I'd love to see a retest of this of levels above 11.10, maybe not even reach there, 11.10, 11.14 or so, but just go have a look above and then see if we can form a top, especially with what the Norwegian central bank may be starting to do. It may have a bit of a psychological effect on the Norwegian kroner, as well as levels in oil, for instance. They're all dead cat bouncers, I agree, if you look at oil. But it does seem that under 70 there is a bit of demand in WTI, and of course for the Norwegian kroner we have to look at Brent, and we have to look at gas as well. But we are seeing a bit of support every time we come down to that 72.5 zone as well. Okay, so I'm going to keep a few things in mind. The Brent price, the fact of whether we go for a retest above 11 towards 11.10 on the dollar Norway, and then keep a very interested ear to what the Norges Bank governance is saying. Right. Where is it? Free ride on the US indices. Free ride on the US indices. Okay, I haven't updated it for a while, but you know what, Angela? I will not disagree with you because there's very little that risk has been able to do. Oh yeah, that one I'm going to talk about as well, silver and gold, just before we close, Angela. But if we look at those indices, look, we've broken here. Let me zoom in just a little bit. We've broken those 57 three quarters. Tested, break, retest, hold, and then we get a bigger setback, even getting slightly below on Wednesday, but it held again. So, I mean, if you look at it from this angle, it's why would you really be short for more than an intraday player? Look at this. Even though I mean I don't like too steep trend lines, because they're too easily broken. But even though here, even this one is still pretty supportive for things like S&P, for instance. And then lastly, I'm not going to disagree with you there, Angela, either. And I also think that if we see some consolidation, I'm not going to speak about unwind. Unwind is too big a term for this. But if we see some consolidation, some adjustment of the books, some book management in the Trump 2.0 trade, gold and silver have been a part of that trade, right? And I would not disagree with gold. I am thinking that, let's see the start of next week. I don't know what's going to happen today, but I'm thinking that gold could actually have a look at least back here and even perhaps down to 26.85, where I'm going to get very interested if we get such a move to start reloading again, because I don't think that the Trump 2.0 trade is done. And even if it would be Kamala Harris, we may see a setback on the metals because of the market is overpositioned on the Trump trade, but she as well is going to not be your fiscal hero, right? It's not going. She can't walk on water. It's still going to be a bit of a mess on the fiscal side as well. And on silver, okay, yeah. I think still is bidding 32 three quarters. Is he? No, I think he raised it already to here. But yeah, we have this break here. Can we go below? I think so, because I'm more conservative than that for the reason that I just mentioned about perhaps a bit of book managing on the Trump 2.0 trade. Data. I don't know. I mean, I want to see really good data for silver to continue to fly, and especially this one is going to fly the day that China that we see a real China revival. I think in the meantime we could see in line with gold a bit of a move closer to 32.5. That's where I'm going to start to get interested in rebuilding what I've sold of my really long-term position. I got out of most of it, really most of it between 34 and 34.65. I'm going to start to get interested just to start to rebuild for the really long term around 32.5, but especially here, if ever we get a really big reaction, and I think that is going to be not before the elections themselves, perhaps, but around here, I think, well, to me at least, it's going to be virtually no-brainer to get back very long. And with that, folks, I'm going to wish you a safe, wonderful weekend. Don't forget to tell the people who are dear to you that they are, and take good care of them. Have a great weekend. We speak again next week. Ta-da.